Good day, everyone. Well, we're going to be diving into the most important topic in trading. Why is it the most important topic? Well, understanding the concepts I'm about to share could be the difference between you turning your $1,000 trading account into $10 million over the next 10 years or into $0 over the next 10 days. Now, some of you might think that's a bit of an exaggeration, and in some ways it is, but in more ways it's not. We're going to be diving into the math of why that's true. And I actually believe that an individual trader's ability to have these extraordinary results, and many traders throughout history have, is directly correlated to how well they understand the concepts I'm about to share. Because if you don't understand them, it's so hard to apply them to your trading because you need to know what you're aiming for. And if you don't know what you're aiming for, it's really hard to succeed, and you get really caught up in the individual details here, and I'm going to explain what all of this is. So hopefully, as we break through some of these concepts and go over them individually, this can be a massive transformation in your guys' understanding to help you think probabilistically. I think these ideas, I talk about them a lot, but there's so many people that just don't understand them, or they don't understand them wholly. And I don't want to exaggerate the effect this video could have, but I hope for some of you it's truly life-changing, because I believe that it's the missing puzzle piece for a lot of traders out there, is just to truly understand what these concepts of risk management, position sizing, asymmetry of risk reward, and how those interact with a probabilistic environment. Understanding these concepts is the only thing you need to start seeing consistent profitability and completely change the trajectory of your trading account. All right, so let's go over what we're looking at here. We have a start equity of $1,000. Win-loss ratio, we're going to play with some of these numbers, but win-loss ratio, 35% win rate. Win-loss risk-reward or relationship is 5-to-1. For some of the newer traders here, I'm just going to cover what that means really quickly. That would look like this. Say your long setup is coming and taking these lows. Here's your stop loss. Your target's up here, taking these highs again. This is 5-to-1 risk-reward ratio. For every dollar you risk, you make $5. We're going to start to understand why the amount you risk is so important. Let me tab back over here. We are simulating 100 trades. We have numbers of lines 20. So each one of these lines is an individual trader, let's say. And we're going to see that everybody has different results. We're going to go over that. And I'm going to try to make this video concise, but I want to take my time to really dive into these topics so you understand them fully. Here we have risk per trade 2%. So again, we're going to play with some of these numbers, but let's start breaking down the concepts first. So down here, we're going to break down some of the stats here. We have biggest drawdown 40%, average drawdown 16%, minimum equity 868, max equity 30,000, average performance, return on max drawdown. So here's two numbers I want to really focus on: max consecutive winners 7, max consecutive losers 18. What we can note is that I actually think this is a pretty big outlier event here, this trader's performance, but not everybody has the same outcome, even though everybody's trading the same data: 35% win rate, 5-to-1 risk reward, 100 trades, same risk per trade. And the best way to understand this is, I love the analogy of a coin flip because I think it's the most intuitive. If we gave 20 people a coin to flip 100 times, we would not be surprised to find that everybody kind of has a different distribution of flips. Like, some people got more heads, some people got more tails, and maybe on average it was around 50-50. But we would be surprised if all 20 flippers got exactly 50 heads and exactly 50 tails. But the more they flip the coin, the more we'd expect those results to converge at 50-50. But you're going to have outlier tails and outlier heads. Okay, that concept can be applied to trading. We're not surprised to see that in a sample of 20 traders, we would actually be shocked to see that there aren't outliers, right? It'd be surprising if there's not some people that were very performant over this sample of flips or trades, and people that were underperformant, and that a lot converge kind of in the middle here. And if we run this simulation 20 times, and we will run it more times, we're always going to expect to see outliers with a sample of 20 traders. It'd be surprising if everybody just lands on the line. That'd be like everybody just having the exact distribution of heads and tails. The other concept here is the sequence. So intuitively, we'd understand that even though a coin has a 50-50% chance to land heads or tails, we aren't expecting it to go alternate between heads, tails, heads, tails, heads, tails, heads, tails, indefinitely for the 100 flips and beyond. We understand that it's going to look something more like tails, 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 heads, heads, tails, tails, heads, 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 tails, 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 heads, 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 tails, tails, heads, and that the average is going to be 50%. Same thing with trading. We're not expecting an alternating sequence of wins and losses. Even, let's say you've backtested a system and it has a 50-50% win rate. That does not mean you're expecting every other trade to win and every other trade to lose in the same way you wouldn't expect that to be the case with coin flips. And the least intuitive idea here is the outcome of our next flip being dependent on the outcomes of our previous flips. This is so counterintuitive because I know for a fact that if I flip a coin 100 times, it's almost impossible. It just lands on tails 100 times in a row. For it to go tails, 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 tails is almost never going to happen. It's an astronomically improbable event. Yet, if I flip a coin 100 or 10 times and it lands on tails 10 times, it does not make it any more likely the next flip is heads. So that's why the idea gets kind of confusing, is how can it be that it's impossible, essentially, that heads doesn't come up, but the fact that tails came up 10 times doesn't make it more likely that the next flip will be heads. But we can understand this because if I'm flipping a coin, what does the fact that the coin landed on tails the last time have to do with the next flip? Nothing. But what I can expect is if I flip the coins enough time, we're just going to start converging back to the 50-50, and we ran into an outlier event there. The reason this is so important is I've seen some, you could say semi bigger accounts and maybe semi considered reliable, so to speak, say something like, hey, if you're on a big loss streak, you should bet more after 5 or 6 losses because the odds of you winning become way higher because the odds of you just losing is so low. But in fact, the outcome of your previous trade has nothing to do with the outcome of your next trade. And so understanding that is so important. And that can go into, like we'll get a little bit into the psychology of trading, but I think understanding these ideas can help with that, where you start spiraling. You're on a big loss streak and you think, oh man, I need to recover this and surely my next trade will work. And so you start betting more and more and more as you have these loss streaks, thinking that surely the next trade must be a winner. But that's not how these probabilistic scenarios play out. All right. So we've covered sort of the understanding that we're expecting different results, even though everybody's trading the same data. Outlier results are expected. And we're expecting the sequence of the trades win-loss sequences to differ. But the most important thing here is the consecutive losers. So this is where position sizing becomes so important. We have 18 consecutive losses here, risking 2%. And we can see that I think this outlier single trader here, I think that didn't produce a profitable result over 100 trades. But they've survived the drawdown. They're trading right above break even. But if you're risking 10% per trade with this system, well, then you're almost certain to blow up your account, right? And 10% and beyond. And we can make this even more extreme by just saying I risk 100% per trade. Well, it's a certainty. We all understand that I'm going to blow up this account. And so this starts to draw the relationship between the profitability of this system either goes from being essentially 100% certain as we, most of these, even the outlier results at the low end should typically be profitable in these situations. Here, for the last few simulations, doubling up accounts here. Here we have a big outlier to the upside. But this system is only as good as our ability to manage our drawdowns. And if we do not size correctly here, we're actually destined to blow up account after account after account, or print unlimited money into the future with consistent returns and consistent risk management. Now, we're going to tweak a few numbers here just to kind of play with these concepts. And that's our win probability, our win-loss relationship, our risk-reward, and our risk per trade. Because something that is important to understand, a lot of people get hung up on win rate, but high win rate doesn't necessarily mean more profitable, and high risk reward doesn't necessarily mean more profitable, although it's one of the most powerful things that you can tweak in a trading system. So let's just turn this to a 2-to-1, 35% win rate, 2-to-1. So here we have essentially break even being the average here, and some traders having a more performant result, trending, chopping around break even, some chopping below break even, and having a drawdown. So we get to understand that this might not be the best system over a long run, 35% win rate, 2-to-1, but we can increase the win rate, and this is where I'd say like having a lower or higher win rate but low risk reward is okay. Now we're trending up, right, over the long series of trades. And if you have a system that produces a 50-50 win rate at 2-to-1 risk reward, that's perfectly fine. We increase this risk reward, the system gets even better. There is nothing wrong with being a higher win rate, high risk or lower risk reward trader, but it needs to produce a profitable result. And one of the amazing things about increasing the asymmetry of your risk reward is that you can actually have quite a low win rate and still produce a profitable result. So something like a 10-hour trader with a 20% win rate is still going to be trending as a wildly profitable trader if they're managing their risk properly. And when we get into some of these lower win rate setups, one thing we have to start looking at is our max consecutive losers are getting very high, 26 here. And this kind of drives the point home on an extreme example is that you can have a wildly profitable system with a low win rate, but it's only as profitable as your ability to survive drawdowns. And so this is where we tweak our position sizing. So might we be a little cautious with over a series of 100 trades seeing 26 loss streaks? Yes, but does that mean that we can't trade this comfortably? No, this system has a positive expectancy if you're not risking 5, 10, 15% per trade. What if you go into risking 0.5% per trade? This protects you quite well from all your potential drawdowns. You survive these drawdowns, I'd say quite comfortably, mathematically. You could even go to something like 20-to-1 risk reward and a 10% win rate and apply these same principles. And so we can start to see here 57 loss streak on this system. I mean, I say kudos to you if you're yes, any trade system can produce. So this is where there's a couple things here. Any trade system can produce 9 losses. You can have a 50% win loss, and you're going to run into 9 losses fairly frequently in a row. So let's say 10 out of a sample of 10 trades, you can be trading quite a high win rate system and produce the 9 losses. But a 90% or 10% win rate system is going to produce loss streaks of like 57 loss streaks, right? So even though something like this could be traded profitably, we trend up here, you're going to have massive drawdowns frequently, and you have to be so careful about your sizing. But what we can see in this kind of extreme example is that we can turn a system like this into just a profitable trading strategy by controlling our risk. So hopefully, as we've kind of broken down some of these numbers, where we can understand that, the relationship between our win rate and the asymmetry of our risk reward and our sizing dictates our profitability. And it might not surprise some of you guys to find that even though these stats, 30% win rate, 5-to-1 risk reward, could produce an infinite money glitch, essentially. If I just gave you a coin that landed on heads 30% of the time with a 5-to-1 risk reward, so I give you $5 for every dollar you risk if it lands on heads, most people would actually lose everything flipping that coin because they're betting too big. So they have a bankroll and they don't survive the 18 loss streak that is coming. And where they could just bet consistently small over time, They're betting way too much and they're blowing up. And it's nothing wrong with the coin. It's nothing wrong with the system. It's a profitable system. The math is there. Where they're getting it wrong is how they're sizing. And where people get kind of confused is they'll think, well, how will I ever reach my goals if I'm only risking 1% a trade? I only have a $1,000 trading account. Well, the quick answer here is that unfortunately, you're probably not going to become extremely wealthy in a month. But if you are disciplined and you really do want to do this, and you're consistent over the course of 10, 15 years, you can completely change your life, even with a $1,000 account. You just need to understand what you're aiming at. And I've talked about this before, but I've had people in the Discord, that's the my educational group, where I focus on stuff like this, obviously sharing trading concepts like technical setups, but really honing in on these types of concepts is important, because I'll see members who will essentially post in like in a really discouraged way saying, hey, I'm seeing improvements, but over the last 6-7 months, I've only I've honed this system to be more like conducive to my lifestyle. Maybe they work full time and they have kind of tweaked some technical ideas and built a profitable system, done back testing, done forward testing. And they're saying, but my system's only producing 5% per month or 6% per month. And so I'm making $5-6 a month. But I'm seeing all these people on Twitter, making all this money, and it's kind of discouraging to see my results. And I can't really, I don't seem to be able to get more profitable than that. Well, what I want to encourage somebody like that to say is that this is the trajectory you're on, right? Like, you don't need, making 5 to 6% a month is an incredible result. And it's not just a pat yourself on the back incredible result. It produces incredible returns, right, over a long period of time. We can understand that, if we go into the compound calculator here, which is year one, you've grown your account to $2,500, $63,000, $15,000, $40,000, $100,000, $260,000. It's exponential, right? That compounded return. And yes, it can feel slow, but where you want to focus your attention is the consistency of your results over time and where the end result is. And is something like this possible? Yes. I mean, there are highly documented traders who have turned $10,000, $15,000 accounts into hundreds of millions of dollars over a decade, applying these exact same principles. And so I want to encourage everybody not to get caught up, especially in the crypto space, getting caught up in the hype of essentially what is lottery tickets. You see just random people on Twitter, this person turned $20 into $50 billion in 10 minutes. These are essentially samples of millions of people, hundreds of thousands of people, tens of thousands of people, just throwing darts at boards. And I'm not saying there's no way to have an edge. I'm just saying that it's not so different than looking at all these people buying lottery tickets and not focusing on the 100 million people that lost the lottery, but the one person that won it. And you could say they turned $20 of lottery ticket buys into $300 million in a week. And you'd say, oh, wow, that's an amazing return. I should just be buying lottery tickets. But there's no positive expectancy there. In fact, you could just spend hundreds of millions of dollars on lottery tickets and still just never win. But because the sample size is so large, you're going to see a lot of these outlier events. What you should be focused on is the consistency and understanding that even though it might not seem that impressive when you're trading a system like this, to be, over the series of 20, 30, 40 trades, to have something like a 60, 70, 80% return and compounding those results year after year after year, the trajectory you're on leads you something like this. And where I want to say this isn't an exaggeration is that it's just the math. And I actually just believe that so many people just don't understand it enough. They might even understand the basic concept, but they haven't embodied it in their trading. And that's what's holding them back from ever achieving these goals. And if you can sit down and say, you know what, I have a 10-year outlook, I have a 15-year outlook, I have a career outlook on trading, and I'm not so focused on the results of my next trade, this trade, heads, tails, heads, tails. I'm I'm going to stay consistent. I'm not going to get frustrated. I'm not going to start over risking, trying to make back my last 2 losses. I'm just going to be consistent over the next 10 years. I'm going to change my life. And that's the reality of trading. I know that it doesn't seem so glamorous to you if you have a short-term outlook and you're trying to retire next week. But if you can have a long-term outlook, I'm sure many of you would be perfectly content to be somewhere like this in 10 years. But the truth is just most people don't have the discipline, but I think more so the understanding to aim towards that type of target. So hopefully this video has been helpful for you guys. I wanted to just kind of go over these concepts a little bit more in depth, and I'll leave it there.